I'm joined by Pankaj Chadha, Chairman of EEPC, one of the largest export segments we have, that is engineering goods. Thank you so much, Mr. Chadha, for taking the time out. It's great to get you overnight. We've had another massive announcement coming in from Donald Trump. Tariffs have been paused on non-retaliating countries. China is still bearing the brunt of about 125% tariffs. Let's just get your first reaction on the pause that has come in.
Well, the pause has come in, but I had Engineering Export Promotion Council, so the pause has only come in on the reciprocal tariffs. The first tariff that was announced was the steel components and aluminium that was on 12th of March. Those still remain 25%. Then the second tariff that came in was 26th of March, auto and auto components. Those still remain at 25%. The third set of tariffs that came was one on 4th, on 2nd, which is the Liberation Day tariff of 10% baseline tariff, which starts on the 4th of April. Those still remain. The tariff that has been paused is only the one which is to start on 9th, which was country specific. But otherwise, the first three tariffs still remain. So as far as engineering is concerned, nothing has changed. We still have the tariff of 25%, and it's already in effect.
Right. So what is the sort of extent of impact that you're seeing, given the three set of tariffs that are still being imposed on the engineering goods sector here in India?
See, as far as the impact that it is, I would say we would lose something like $4 to $5 billion of exports. Our total yearly exports to the US is between 19 and $20 billion. Out of that, the first set of tariffs, which came in Chapter 72, 73, and 76, that is steel, components of steel, or products of steel and aluminium, those would be about $5 billion. Then came in the auto tariffs, which would be around $2.5 billion. And then comes in the balance, which is at 10%. So all put together, I think we would look at anything between $4 to $5 billion of fall in exports to the US market, despite the pause.
Right. And this $45 billion, sir, is in the next 3 months or till the BTA is negotiated. What's the time period for that?
No. We are looking at if nothing happens further.
Okay.
If there is no BTA which gives us a preferential tariff or whatever it is, and these three tariffs remain, then we would lose on a yearly basis $4 to $5 billion.
Got it. All right, sir. Sir, you being the chairman of the Engineering Exports Promotion Council, I want to get your word in on the fact that China is still being slapped with a much higher retaliatory tariff that is coming in. What sort of imbalance will that cause for A, the global market, and B, for India? Are we seeing any dumping concerns from China, given the fact that they have a much higher tariff now?
Well, as far as the dumping concern, as far as steel and steel is concerned, we already have a protective wall of BIS, QCO, and NOC. And I think there is a concerted decision not to give any BIS or approval to any Chinese mill. So I think that wall should be sharpened enough for as far as the steel part is concerned. I think the government is trying to put the QCO on the entire value chain. If that happens, then I think I would say we are well protected as far as the Chinese goods are concerned. There, I don't see that much of a problem. But definitely, the point will remain that if China's tariff is so high in US, they also are going to seek alternate markets, same as what we are trying to seek. And in those markets, there would be some very fierce competition. So, but that's well to say, because at the end of the day, we at least know that we have to de-risk from USA. If we have to de-risk from USA, we have to look at alternate markets like LAC, Latin America, Central America, West Africa, North Africa. I'm sure the Chinese are looking the same.
Yep.
So the fact is, those markets, we would see some extraordinary tough competition. And definitely that's a cause of concern.
Right. So also given this sort of economy China is, given how big uh, it is set to cause some sort of a trade imbalance, right? There will be some sort of an imbalance because we have a very high import number from China as well. Uh, what's the sort of global uh, imbalance that this is going to cause, given the fact that one country has such high tariffs while the others are still relatively much lower?
Yeah, and that one country happens to have, I would say, 18 to 20% of imports into USA. China's imports into USA, or China's sales or exports to USA, let's put it that way, are higher than India's total exports. So the fact is that I think China exporting is about $459 billion, and our total global exports is about 437. So China's exports to USA is higher than India's total global exports. So naturally, you can imagine the scale that is going to get disrupted. And the worry is going to be, where will China sell? Steel may be well protected. Other items we'll have to look at. I'm sure all the other countries in the world are also now starting to look at. But I only want to say that this pause is 90 days. It's a very dynamic situation, a very volatile situation which changes every day. Every day there's something new that comes up. So we will have to all wait and watch. One, what happens in the pause after 90 days? What's happening? Two, what is the BTA that we can get out of the USA? Three, what are the BTAs that other countries can get? Because it's also important that our competitor countries, what sort of deal are they getting, like Korea, Japan, this thing. And four, we have also, as far as the, I would say, products of steel, the and even to some extent auto components, we would have some competition from the Mercosur region, which is the Latin American bloc, who has 10% duty. And if and they were 10% even in the specialized countries. So they stood at 10 while India went up to 26. So we could see, and that includes Brazil, which is a fairly large producer. So there we could face some challenges if our country-specific duty goes up from 10 to whatever number it is. Then we could face some challenges there also. So I
Right.
think it's too dynamic, too volatile for us to give a comment. We'll have to wait 90 days and then see what happens. Maybe China
Well,
also gets a deal with US. Nobody knows anything. So frankly, I think it's too early to talk.
right. Fair enough. So it is a highly dynamic situation that we're looking at. Uh, uh, also, sir, I think from the meeting yesterday, what we've also heard is that exporters were also cautioned against the fact that given that India has a lower tariff compared to several neighboring countries, neighboring Asian countries, there might be India being used as a bypass or a conduit for rerouting of goods to the US. Do you think that is something the government will legally now take a legal route to stop, or is it just a guideline for exporters at this moment?
See, the government cautioned us that we should not succumb to that pressure.
Okay.
The fact is that our friends in these so-called nations which have higher duties, like Thailand, Indonesia, would definitely maybe approach us, maybe say that, okay, can we sell some of their products to the USA via the Indian route? It, I don't think that's so easy to do, because the US is now going to look at extremely cautiously and carefully what comes out of each country if the country specific quota is there. Now, with the pause, everybody is at 10%. So that's okay. But let's say post 90 days, if there is a country specific quota and there are countries with different quotas, differential quotas, then I'm very sure the US Customs is going to look at very closely what is coming from where and whether it actually originates from there or not. So the rules of origin will come in. The rules of origin in the MFN is currently not so tight. It only needs, I think, a positive value addition. But when the moment you get into a BTA or you get into an FTA, then the rules of origin will be extremely tight. They would look at maybe 33% value addition minimum, and also a change of HS code on the 4 digit, which is what they are looking at. So once that comes in, I don't think routing is possible. But I'm sure that will come in if there is a differential duties in countries.
Got it, sir. Uh, so also from the key meeting that was held yesterday, uh, what the government is indicating is that we will shed protectionism, right? There will be no sort of protectional changes coming in to protect exporters from all the volatilities. It's all about getting out there, diversifying, heading to new markets, right? Do you think at this point in time, is there any sort of fiscal room for exporters that the government has?
As far as the fiscal room is concerned, the government has only that small 2,250 crores that came into the budget in the export promotion. Out of that, I think 200 is the MAI, 50 is the lamb growth diamond, and 2,000 is available, 2,000 crores, which government, I think, is considering very actively to reintroduce the high interest equalization scheme for the MSME sector at least. And that could possibly take away a larger part of that 2,000 crores. About at least 750 crores will go in that. So in terms of a headwind, if the government has any sort of fiscal incentive to give, no. But we have asked for a very important thing, which possibly government can try and help the MSME sectors and the general exporters. Is, you see, what is happening is we have asked simply that we can't just now depend on USA. We need to de-risk, which means we need to find other markets, which would be what? Latin America, Central America, North Africa, West Africa. More riskier markets, going out of our comfort zone. When we go to these markets, naturally, we'll have to have some selling point. And the selling point will include the fact that we'll have to give them credit. It can't be that I say I'm coming in new and I say I don't give you any credit, you cash and carry. It won't happen because they are also no. A lot of these countries sit in category C, right? We have A category, B, C, and D. D is default, so there is no question of any bank advances or ECGC credit. But the category C countries, there we are currently it's so far restricted to get any credit approvals or any advances or any credit guarantees. We have requested the government of India to have a discussion with ECGC and find out a holistic solution to this problem. Because, like, for example, now, Turkey is in country C, Egypt is in country C. A lot of the newer countries that we will try and tap would sit in country C. If we are not going to be able to give credit, we are not going to get advance from our banks, PCs, export bills, whatever, then how do we sell to them? And then how do we de-risk? So the minister has very gladly asked for a meeting between ECGC, Ministry of Commerce, and EEPC to try and see if we can get to a solution. It has to make business sense to ECGC. It can't be that it doesn't make business sense. But some sort of a give and take, some sort of a holistic approach towards how we can get this sorted. So hopefully that meeting should happen maybe this week or definitely next week. And we try and get that solution in. Once we get that solution in, it will help us in de-risking. So that's the sort of fiscal, if you may call it. It's not something that goes out of the government's pocket, but it's something which is fiscally advantageous to the exporters. Thank the government for having taken a proactive stand. And hopefully by next week, we have this meeting and we try and get some sort of a guideline on that.
Right. So, yeah, clearly the government willing to move with the exporters in the right direction, though fiscally
Yes.
Fiscally there might be limited headroom, but still move in the right direction. Lastly, sir, last question. I want to get your word in on the BTA negotiations as well happening. We're hearing reports like the government, like we are willing to cut tariffs to 0% on certain segments like EVs following that, following the BTA negotiations, even blocks like the EU are pursuing for a similar deal, right? What do you feel? How will that impact India's domestic industry?
See, now, as far as the BTA is concerned, the government is negotiating. They have not given us, they have taken our data. We don't have the government, this is a very private thing. The government will not share with us what they are doing. But the factor remains is in certain areas we have headroom to give. So wherever we have headroom to give, I'm sure we are going to give them zero or reduced duties. The problem will come in, I think, 2 or 3 areas where, I mean, other than agriculture being a very sensitive subject, I leave that aside. For example, auto. Now, if we were to give them some benefit in auto, which we will definitely give, since we're negotiating an FTA with EU, we'll have to give that same benefit to EU also, because they have already asked. The EU has already now asked that we need a benefit in auto. Same way is if we are going to give benefit to whiskey, the bourbon whiskey from Kentucky and Tennessee. I'm sure when we are also in very hard advanced stage of negotiation with UK, I'm sure they will ask for Scotch whiskey also. So we have to play, I would say, a very tight walk rope. But I guess when you do a BTA and when you are bilaterally talking to various countries, uh, you will have to play to the best possible. It's a tough job, but I guess that's how our government will have to play.
Right. Yes. Thank you. Thank you so much, Mr. Chadha, for your time. Always a pleasure speaking to you and getting your views in.
Thank you. Thank you very much.